Gold prices have been under intense selling pressure, with prices finding no respite in spite of the oversold conditions. Growing expectations of US Federal Reserve scaling down the bond buying program has taken a toll on the precious metal complex. In addition to that, pessimism in the futures market and subdued demand, moderating demand, especially in India and China, is also weighing on the sentiment. The recent sell-off is completely different to the sell-off which we witnessed in April, where we saw the pessimism in the futures market was absorbed by the pickup or by the pickup in the pent-up demand in China and India, where jewelry sales and the coin sales have registered new record highs. But this time we believe that the physical demand will not be able to absorb the selling pressure in the futures market, as June-July period is traditionally a lean period in India as far as jewelry sales is concerned. The investment demand has been drying up, especially when you talk about ETFs, where the SPDR Gold ETF, the world's largest ETF, has been witnessing a consecutive outflow, where the total holdings are at record lows, in fact now below 1,000 tons. On the broader front, we believe that markets are realizing the fact that in spite of persistent monetary injection by various central banks across US and Europe, the inflation does not remain a threat. In fact, inflation has always been tamed in the past 4 to 5 years, and a lot of central banks are eventually contemplating at scaling down their monetary stimulus in the coming months or in the coming years. So all these factors and the emerging scenario would deprive gold of the bullish props which have been supporting prices for the last 8 to 10 years. So the medium-term outlooks look weak, and we believe that 1200 levels, which is a psychological level, will be breached, and would be the eventual target seems to be $1,100 per ounce on the COMEX. On the domestic front as well, we believe that prices would eventually go below 25,000, and 24,500 seems to be a likely target in the coming months.